Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on Etsy. Reason for this is we can see it is continuing to sell off and has come into a very low risk buy entry, and is starting to have a bit of a divergence as it's coming into the third deviation, so most likely be a good buying opportunity. But as always, we start off on a clean daily chart, see is there any gaps that need to be filled, because more likely than not these gaps will get filled and they will tend to have a big movement around them. So we only like to use very obvious and clear ones. For example, this one at around 209.50, we would expect this to have some sort of significant move. Again, the same thing at around 259, and really those are the only two obvious ones. The rest of these gaps have been filled so far, so really 209.50 and 259 are the key ones we're looking at. Now we'll go into the standard deviation charts. We can start seeing where optimal times to most likely be buying. And looking on the Etsy chart, we can see around 150 and 142 are going to be those key buy zones. Now, why are these going to be key buy zones? Because it's the third deviation on both the 4 hour and the daily. You don't tend to see large cap stocks break out of these zones. As if you don't understand standard deviations, you expect 68% of the data to be within the first deviations, 95% of data to be within the second deviations, and 99.7% of data should be within the green deviations, which is the third. So when we see Etsy come down to this level, it is really an area where we would expect it to start bouncing and pushing upwards from there. Also, what we are starting to see on the 4 hours, you can see it's starting to have a bit of a divergence in price. It would be nice to see it on the daily as well, so if you're looking for extra confirmation, it could be a good idea to maybe wait for some sort of a divergence on the daily, or at least for the initial bounce off the 150 to make sure we do get that bounce that we're looking for. Now, where are targets for these levels? Well, kind of where we are now, 170 to around 182. These are the second deviations. So as we can see, price is just below this, so we can still consider that a buy location because it's considered low risk. So that does mean you can use this level in certain ways. If you're waiting for the drop down to 150 and a bounce, then you can lock in profits at 170, because again, it is an area where we would expect some sort of movement. But really, we are looking for targets much closer to statistical mean, because these are levels where we don't want to hold past, because then it turns into a bit more of a gamble. So looking at this, we're really looking to buy in around 150 and having a final target of around 225. Reason 225 is the final target is that statistical mean on the daily, and it's the lowest of the two statistical means, so really we're not looking to hold in past 225, 226. And then any of these levels on the way are areas you can move your stops, lock in profits, or whatever you want to do. So that's 170, 182, 183, 197, 209, 215, and the final one being 225. All areas where, again, you can lock in profits, move your stops, and really kind of just do anything around that. Obviously, you'll use these levels differently, but these are just levels where we expect big movement. But really, that is the overall breakdown on Etsy. So I hope you enjoyed the video. Hope you see you in the next one, and that's it. Peace.
I go dumb for that money, dumb for that money. Profit on top of profit, Donald Trump kind of money, okay.